This is the Ellis Martin Report and Money Talk Radio. Today my guest is Ed Kovalik, CEO of Prairie Operating Company, trading on the NASDAQ as PROP. Prairie is a fast-growing oil and gas producer in Colorado's DJ Basin, with over $600 million in acquisitions in just the last 2 years. The company is scaling production rapidly while emphasizing efficiency and clean operations. We are compensated for this interview. Forward-looking statements may be made. Investing in securities carries risk, and you should always do your own due diligence. Ed, welcome to the program. It's great to visit with you today.
Hey, it's great to be with you today, Ellis.
Now, you and I had the pleasure of visiting out at the properties in Colorado, and although I'm quite familiar with what you do, the audience not necessarily is, so I may ask some redundant questions in that regard, okay, just to educate the audience.
It's my pleasure to answer any and all questions and let you know everything you need to know about Prairie.
Give us an overview of the company to begin with.
Sure, I'd love to. So Prairie is a relatively young oil and gas company. We started up about 2 years ago, really with a mission to build a high growth E&P company in the public markets. We've begun doing just that. We are both very active acquirer of assets in Colorado, where we're focused in the DJ Basin. We've done about 5 acquisitions in the last 2 years, the smallest one being sub-$1 million bolt-on, the largest one being a $600 million deal we closed last March. And so outside of growth through M&A and consolidation, we're also high growth in terms of our development program, really running a rig full-time in the DJ Basin and drilling and completing a lot of wells.
We're going to get into all that, but I have to ask you this question to begin with. On this program, we're typically covering clean tech, clean energy, critical minerals, things of that nature. We're talking about oil, but the perception is, at least in the media, at least in the country, that oil isn't necessarily clean. I've been at your operations in Colorado. There's no smell, there's no odor. It's a very clean operation. Let's face it, most of the cars, most of what we use, most of what we consume, every plastic, every device, everything comes from oil ultimately, and yet the market is bearish on it.
Yeah, there's probably not a topic out there that's been inundated with more misinformation than fossil fuels. I try to do my part to bring a little bit of truth to this topic, and it always excites me to educate viewers on this. We joke because you've seen our operation in Colorado. It is a very large prairie. Our leasehold is about the size of Miami, just to contextualize the scale. And there are more cows than people out there. It's a big dairy farming cattle area. And the thing we always joke about is that there's more CO2 being generated by the dairy operations there than us producing oil, because it's true. It's funny, but true. But in the context of oil and gas production, we in Colorado are really proud to produce the cleanest molecule of hydrocarbons, not just in the United States, but really in all of the world. And we do that through a number of practices. So for one, we very minimally truck hydrocarbons. Most of what we produce is put directly in pipe and transported to market. So we really cut down on the emissions of transportation, for example. A big one for us is that we don't flare gas. We put all the gas we produce directly into pipeline, which really saves on methane emissions. And then we're really lucky to have great access to electricity. So we use an electric rig to drill wells. We use an electric frac fleet to complete wells. And so we are really light touch on the environment. Further to your point, fossil fuels are in general pretty clean as they're produced, not just where we are, but outside of Colorado. And fossil fuels are in everything. So 60% of the electricity generated in the United States is from fossil fuels. There really is no such thing as an energy transition. There's only energy addition, because demand on energy is being increased every year substantially. In particular, now that AI is driving really profound growth in data centers. And so all that electricity is predominantly being generated by fossil fuels, and that's not changing. And then fossil fuels are in everything in our lives surrounding us. And so we're just trying to bring the cleanest molecule of fossil fuels to the market, and really proud of our success in doing that.
I don't think we've answered the question yet as to why the market, why investors seem to be bearish on it right now.
It's really interesting. So, for one, in terms of fossil fuels relative to what we call renewables, being solar and wind, there's been this false narrative put out there for years now that we are in this green energy transition and there's a replacement for fossil fuels. That narrative, I think, is starting to hit on reality because actually fossil fuel use is increasing around the world since most developing economies are building their economies the way we built ours on the back of fossil fuels. And they're really energy poor. People in the developing world are living in energy poverty. So you've got almost 4 billion people today that still cook using wood inside their homes or animal manure as fuel. So the demand for fossil fuels is growing everywhere. In terms of the idea that our economy is somehow going to change around solar and wind, that's just proven to not be true. They're not economic without government subsidies. I think you're seeing this White House making its best effort to educate the public on that and cutting subsidies. I don't think you're going to see solar and wind really take over the mantle of oil and gas in terms of energy generation or really account for a greater percentage than they currently do, which is about 15 to 25% anywhere between the United States and the rest of the world. Fossil fuels are pretty much here to stay.
What are the executives, people like yourselves, your peers, feeling right now when they're buying their own stock? What are they seeing that Wall Street is late to the party on?
There was this whole ESG narrative that is now really starting to die down because most funds that were focused on ESG grossly underperformed. But part of that narrative was the lie that we're not going to need any fossil fuels come 2030, 2040, 2050, pick a date that, you want to believe. And when we were starting Prairie just 2 years ago, I had people tell me, Kovalik, you're an idiot for starting an oil company. We're not going to need oil in 5 years or 10 years. Of course, we knew that to be ridiculous. But I think a lot of the investing community bought that hook, line, and sinker, and a lot of capital kind of left the building in terms of energy. Now, the irony is that as an industry, fossil fuels in this country produce the greatest dividend yield of any industry on the S&P, yet we trade at the lowest possible multiple. To me, being a deep value guy, that's the opportunity. There's nothing greater deep value than that, in my opinion. But I think the market will eventually turn like it always does and recognize that we will need fossil fuels for as long as we can possibly tell today, because there really is no replacement technology that's going to be impactful anytime soon. I'm a big proponent, big believer in nuclear, but that's so bogged down in regulatory, and it's going to take more than good intentions to fix that. While they're trying to figure that out over the next 25 to 50 years, I think the nation's going to depend on every ounce of fossil fuels we can create. And the big dirty secret is that we're running out of inventory in the United States for shale development. We're peaking out at a little over 13 million barrels a day of oil produced in the United States. And I'm a big skeptic that we can really increase that level of production because it's hard enough just maintaining that.
What does that mean in the short term for supply and demand, or take it out in a year or two? What does it mean?
I know that the only truth about the oil and gas market is that we're always wrong in trying to predict the price. And so the entire market right now is net short oil and gas. It's more bearish than we've been since 2016, just to put things into perspective. And that bearishness has been really driven by OPEC bringing back the 2 million barrels that it had curtailed. And so there's this sense of gloom and doom near term, but all the same market commentators think that we're going to see an oil super cycle after the near bearish couple quarters ahead, really 26 on, really going back to the fact that oil in the production in the United States is really peaked out. And I think that once OPEC really forces the shale industry here to capitulate, as we're seeing now with rigs being pulled and production maxing out, then control of the market goes back to OPEC. Look, there are a lot of truths about supply and demand and macroeconomics in oil. One of them is that OPEC never actually produces what they say they're going to produce. So the 2 million barrels that they claim they're bringing back, they're far short of those quotas. The question is, can they even get to those quota numbers? But even if they do, I think the general macro perspective that there's probably a short squeeze in store sometime over the next 12 months in WTI is probably right.
Do we need some kind of event to drive the market? I remember back in 2011, Fukushima happened, and then I believe oil spiked after that, and it stayed there, backed off for a while, where it's been for several years now. Is that what we need, or are we beyond that?
Again, if you would have told me that we would be bombing Iran and the price of oil would not really reflect that, I would have bet you everything I own against that. And I would have been dead wrong and dead poor as a result. And so here we are, where we're living in a world where oil prices do not respond to acute high velocity events geopolitically. So the question is, what will they react to? I tend to think that oil is actually pretty cheap today when you factor in inflation on an inflation adjusted basis. The oil in the low 60s is really the equivalent of kind of oil in the mid 40s, going back just to the beginning of the shale revolution 20 years ago. Oil is actually really cheap historically, which in my view means that there's only room for it to go up. Now, where's the cap? We saw oil prices touching $80 just over the life of the time since we started Prairie within the last 2 years, and nothing much happened. So I think prices that are $80 to $90 are probably coming in the midterm around some of the macro that I just described with respect to OPEC and market control.
The great thing about Prairie is you don't have to rely on any of that. Your numbers are up. Revenue up 400% quarter over quarter to 68.1 million, and you just keep on going. Production up to 540%. Up to over 21,000 barrels of oil per day. You're in business and you're growing.
Look, we're really focused on growth. Our mission is to get to about 100,000 barrel a day company. We've got everything in place to accomplish that. We've got the team, the assets, the midstream takeaway. We guided that we'll produce on average about 24 to 26,000 barrels of oil per day this year, but we'll exit the year at a materially higher rate than that. And we're trying to differentiate ourselves in a market that has matured a lot through massive consolidation of our peer group. There are far fewer companies that exist today than did even just 5 to 10 years ago. We've seen the super majors come down market and buy large caps. We've seen large caps buy mid caps buy small caps. And so that's all created a market of peers that are low to no growth, focused on dividend returns. We're high growth and really hitting that inflection point over the next 12 months. We're cash flow positive, but for the time being, we're reinvesting cash back into that growth and really see a great runway in place to accomplish that.
You've closed $600 million in off-market acquisitions in 1 year. How did you manage to do that, sir?
We're cheapskates. We don't like to participate at auction. We've been able to buy everything we bought to date at about a 2 to 2.5 multiple. We've seen some of our peers now buying things at a 4 multiple or greater. God bless the sellers that can sell at that level, and God bless the buyers that think they can make money at those purchase prices. But we don't have to buy everything to be successful. We look for our spots to do the deals we like. We look for value. We look for assets that are accretive to our midstream system, and there's plenty to go out there and buy. We're also doing small bolt-on deals constantly. I think we announced a couple that are in process during our last earnings call that we're looking to close here shortly. There's a lot to do within our criteria of acquisition metrics, and we'll continue executing on that strategy.
So you're going to continue to acquire properties that look good to you over the coming years?
As long as we can do that at a value that we find attractive, we sure will.
Is that outside of Colorado or basically the DJ Basin area and extended out from there?
We're really DJ and Rockies focused. So Colorado has been the focus to date and continues to be, but there's no reason why we wouldn't in the future look at the DJ over the Wyoming border. We can almost throw a baseball from where we are to Wyoming, so it's pretty darn close. Never say never. We might look at other areas as well, but for the time being, we've got a lot to do right where we are. We're big believers in focus as well. We're staying focused in the Colorado DJ for now.
Would it be safe to call you a money guy? You've got a background on Wall Street. You're not necessarily your entire life in the oil and gas business. How did you wind up with Prairie?
Yeah, I'm not sure if you called me a name there, if that was a compliment, but now I do come from a career on Wall Street. I actually banked as an investment banker. I banked a lot of the sort of shale 1.0 companies as this technology was being innovated and developed in the early 2000s. And I just fell in love with it, having banked a lot of other industries like biotechnology, technology, and seeing a lot of failure, frankly, in terms of companies just not executing on their business plans. Oil and gas is exciting to me because it drives the entire economy and it's tremendously innovative. You've been up and you've seen our operations. It's amazing how when you look at the rock that we drill through, you'd never know it was chock full of oil. So it's like alchemy. We're turning this rock into liquid gold. But doing that in this country also employs over 10 million people, mostly blue collar workers that are earning 84% above private sector wages. So we're really proud of what we do in the economy, and we're really proud to be the main energy driver for American industry.
Who are some of the investors that are involved with Prairie at the moment?
The management team are really invested in the company, so we're deeply aligned. We own around 15% of the company, if I'm not mistaken. And then we've been really fortunate to have some really great private family offices like Narragawl invest with us. And more recently, as we're growing, we've attracted some great institutional investors as well, like Blackstone and others that have been buying our stock in the market. And we've built a great retail investor base as well. Last I checked, I think we had about 16,000 shareholders. As we mature and grow up, we're just expanding that ownership table.
You're the CEO of the company and you're a sponsor of this program. So the two of us are biased here. What is the potential upside for investors right now in the market? I'm talking about shareholders.
Look, we're big believers in the company's growth, and I'll tell you what I tell every institutional investor we meet with. Our development plan is very simple to understand. We're currently running a one rig program in the DJ, and because it's so terribly efficient, that amounts to about a drilling cadence of about 60 wells per year. And we're now drilling and completing those wells for a little over $5 million. We started at a higher cost structure. We're offsetting peers. We're doing similar wells for 6.5 to 7.2 million. We've now gotten that cost down to about 5.2 to 5.6 million and driving that ever lower. And so we're going to maintain that sort of $300-ish million CapEx program a year. And we have about 10 years of inventory as we currently sit with about 600 or so economic locations. And sometime next year, the cash flow that we generate is going to exceed that CapEx program that we're spending, and we're going to start throwing off a significant amount of cash. And our focus on that cash is distribution back to shareholders as dividend income. Companies basically have four choices of uses for excess cash. It's dividends, it's share buyback, it's paying down debt, and M&A. We don't really have a need to pay down debt since we're fairly under-levered compared to our peer group at about 1x leverage. And we are doing M&A. We are using cash for that as well. We're not big believers in share buyback programs because unless they're really impactful in scale, they tend not to really be that impactful in price. I think the opportunity for shareholders, which is why we continue to buy our own stock, I just bought some today, in fact, because our window opened up, is because we see that inflection point happening in the next 12 months. We see the growth that we're able to accomplish as well. We understand the M&A pipeline that continues to be really enticing in front of us. And we're here to compound our capital invested, not just clip a dividend return. And we're trying to attract shareholders that have a similar interest in compounding their capital invested. And we're extremely cheap. Our stock is really misunderstood in the market. We trade at a really stupidly, absurdly low multiple in the market. And that's why we're buying our stock. We think it's a huge opportunity.
Ed, I can't think of a better note to end on. I want to thank you very much for your time and sponsoring this program. And I hope the next time I see you is out at the DJ. Thanks so much for joining me in the program today.
Hey, thanks. It's great to be here, Ellis, and you're welcome to come drill wells with us anytime.
I've been speaking with Ed Kovalik, CEO of Prairie Operating Company, symbol PROP on the NASDAQ. For Money Talk Radio and the Ellis Martin Report, I'm Ellis Martin.